In this presentation, we will adjust open items, answer questions for the more complex QuickBooks file we had, the file that deviates more from just a strict cash basis method, answering the questions that we have received from clients within that file. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Our remaining open items are going to be much the same as the simplified method, so we're going to go through this a bit quicker this time. We're going to go through our open file here. We're going to look through these open items, open up the docs, open up the 2019 January, open up the open items file. We are also going to go back to the February and open up the open items file there as well. And then we're going to open up the QuickBooks file, the more complex file. So we're going to go back to guitar lessons. We're going to go to the QuickBooks data files. And we're going to open up the more complex one here, QuickBooks 3. Double clicking on that, opening up that QuickBooks file. We should also have a backup that'll take you to this point in time as well. We're going to enter these open items. These were the questions we had when we went through the client information for the client, and we're going to say we have answers to these. We're going to now enter these into our more complex QuickBooks file. Here is the QuickBooks file. Home tab is open. We have the open items open. You can open the open items window by going to the view tab up top and selecting the open window list. We'll open up our reports by going to the reports drop-down, company and financial. We're going to start off with the balance sheet report. And this time we're just going to do it for the entire time period. Going to the customize reports, going to 01/01/19 to 02/28/19, and we're going to say OK. Now we're going to do the same thing for the profit and loss reports. Company and financial, profit and loss. Date range 01/01/19 to 02/28/19. This is the report we are going to spend most of our time on because we have the uncategorized income and uncategorized expenses. Those being the areas that we really are going to answer most of our questions. That's why we set it up this way. So if we go back into our open items then, we've got the same open items here we had. Do we have an employer identification number, address? We're going to say that those have been answered. We're just going to enter the data as is here. We've already answered this question for the uncategorized income for the $50,000. We've colored that. Now I'm going to cross these out by going to the Home tab, Font, and just crossing out as we go. Then we have a $10,000 uncategorized income. Let's take a look at that. So we're going to go to QuickBooks. And we've got this 10,000. All we're doing is really answering the questions for these open items, double clicking on that. We're going to say, here is the deposit 10,000. It looked funny when we deposit because it's larger, it's all even. And we guessed it was going to be a deposit from the owner. We guessed right. So we're going to say, okay, I'm going to take it out of income and put it into an investment from the owner. Double clicking on that. Changing the uncategorized account to deposit from the owner, which has to be some type of equity. It's not going to be a draw. We're going to put it directly into the owner's equity account. Again, if you want to track those separately, you could make an account called owner investments. Just make sure it's in an equity type account. It's usually okay to put them here because there's not going to be too many of them. We're going to say save and close. Yes. QuickBooks is saying, hey, you're hitting a retained earnings or equity account. That's unusual. We know that. We're going to say OK. Close that out. That has now been eliminated. If we go to the balance sheet, say OK. It has now been placed in the equity section on the balance sheet. If we double click the balance sheet, we should see the 10,000 here. Closing this back out. We're going to go back to the profit and loss because we're really going to concentrate most likely here, uncategorized income. See what else we have in the open items. We're going to say we found that one. Then we have Epiphone and Gibson. We didn't know who these vendors were. We looked them up online and said, hey, they deal with guitars. Maybe you're buying and selling guitars from them. Are you buying equipment from them? If that's the case, then we're going to record them as cost of goods sold because we're not going to track the inventory. We're on a cash basis. And again, this is a reason why we might deviate from customers or clients that are dealing with inventory because we're not going through the full process of tracking the inventory. We're really just recording more on a cash basis here. So we're going to go back to our information here. We're going to say anything that's a Gibson or that is an Epiphone, we're going to assume they're purchasing things that they then resold, and therefore it's going to be cost of goods sold. So we're going to double click on this item and change the category from uncategorized, and we're looking for a cost of goods sold account type, and we're going to say purchases resale items, and save and close. Now I'm going to do the same thing for anything that's a Gibson or an Epiphone. So here's another Gibson check, double clicking on it, changing this to purchase, save and close. Every time we go forward, of course, now that we have this answer, we don't have to put it into uncategorized funds. We can put it directly where it should go. Here's the Epiphone, selecting that, changing this to the resale purchase, save and close, yes. Then we've got the Epiphone here, double clicking that, changing the item to cost of goods sold, save and close, yes. So there we have that, and it looks like that's all of them there. Back to our open items, we're going to say, okay, we found this one, we found that one. The green ones are ones that we have already found, so we're good there. These are all been found. Now we're going to say the Vanguard. There was a check that went to Vanguard for $15,000. We looked up who Vanguard is. We just Googled Vanguard. We said, they look like an investment company possibly. Maybe they took some of the money out and put it into stocks and bonds. And we asked the client. They said, yep, that's what we did. We put the money into some investment. So we need to take this off the income statement. It's not an expense. It's some type of investment. So we'll go back over here. We're going to double click on the 15. If we look for an investment, that's going to be an asset. It's not an expense. We can't put, they just put money from the cash checking into like another investment. So we got to go up and see is there an investment. It would be an asset type, bank, accounts receivable, no other asset that looks appropriate. So we're going to make one. We're going to close this out and call it just investment tab. Set up a new one. Now it has to be an asset account, so it's going to be an other current asset is where we're going to put it and say, okay, continue. And that's it, save and close. Now note what we're not doing. We're not going to try to track the investment and track dividend and interest too closely until it hits the bank account again, right? So we could try to reconcile the investment account, but typically we're going to see the differences, the changes in dividends and interest when it clears the bank. In terms of capital gains and losses, in terms of the value of the equity going up and down, we're not typically going to enter that information here. One, because it's not going to be something that we're going to report on a tax basis until it's sold, typically. So note what we probably don't want to get into, in other words, is if a customer asks us to kind of track their gains and losses on the investments, not typically something we were looking to get into here. We're on the cash basis information, just recording the profit loss for business related activities, not typically for customers that are in stock trading, because that's going to be a specialized kind of area in and of itself. So we'll save and close this. Yes. And okay. And then now if we close this out, we took that out of the uncategorized account. We put it on the balance sheet, and we put it on the balance sheet under investments. So now it's under investments. Okay, so now let's go to the profit and loss again, see what else we have that we need to recategorize. We got this one out. This one we had hot air balloons. So he wrote a check to something called hot air balloon rides. And again, we're going to say, the owner tells us that's personal, not business. And we go, okay. And again, you're going to have some clients that do that very well, the separation between business and personal, and sometimes some don't. It's hard to do that actually because you have to figure out, which accounts you're going to pay for. So hopefully we can help our clients to get better and better at that process to make it easier on everybody involved. And every time we have to ask them questions about this or that vendor, hopefully that helps them to get better at just differentiating. So we don't need to ask the questions, and we get better at just doing this process. So if we go into this item, we're going to say the hot air balloons, double clicking on that. That's going to go to draws now. It's not an expense. We don't want it on as an expense. We're going to put it up here into equity somewhere, take it off the income statement, and put it into draws. So they wrote a check for hot air balloon rides on the business account. We took it out and put it into draws. Save and close. So it's out of here, closing this, not on the income statement at all. Balance sheet account. It is under draws on the balance sheet, so it's not affecting net income. Back to our open items. We're going to say we found that one. And then we got the steakhouse, Wild Bill Steakhouse. We asked about that, any restaurant. And they're saying, we're going to say that the customer this time says that is a business expense. So we're going to say, okay. Again, not our job to really go into a lot of depth in terms of what is and is not a business expense. Because again, the rules could change, could be where you're at, the type of industry. That's for the tax professional and or your accountant, depending on what your needs are in the financial statements to help you answer whatever you come up with that with them. We're happy to categorize in that area. So we're going to say the uncategorized expense and Wild Bill's house. Okay, so we're going to say this is the one. And this is then, if we look for an account for something like meals and entertainment, QuickBooks has provided us with that account. So we're going to say that's the one we want. Save and close. And yes. So there we have that. Here's an Epiphone. We had already said that all the Epiphones should go to cost of goods sold. So I'm going to double click on that. I missed this one. And we'll go to this one and take that to cost of goods sold. There's that. See what else we have here. So this is done. We've already done the green ones. So I'm going to cross those out. And then we've got the withdrawal of 300. The first one we said was 300 was personal and a draw. And then the second one we said here in February was for business related purposes. So this will be common that we have draws here. So we've got this first 300, money was taken out, and we need to put that somewhere. So we're going to go ahead and under this method put that to the draws because they said that this one was for personal use. But it could be that they tell us, well, it was a draw that I took money out and spent it on the business, and they might not even know what they spent it for. They just said, hey, if I took it out of the business checking account, it must have been business related. So then we're going to put it in some kind of expense account. So the first one, this is our method. If they tell us it's a draw, we'll double click on it and we'll go into draws and put it into equity. That means it's not going to go on the income statement anymore, not going to reduce net income. If on the other hand, they say it is like the second one, part of business expenses, they don't know where it went, but it went into business expenses, then we could say, okay, we can either put it into some account that that's kind of general, like office supplies, or we can put it into a miscellaneous expense. I'm going to make an account called miscellaneous expense. And again, anytime you're going to have like a general account, like office supplies, office expense, miscellaneous expense, random expense, then there's nothing you can do if you don't have the categorize to eliminate the fact that if that account, that dumping ground account gets too high, it's going to look funny. As long as it's a fairly small amount, go into miscellaneous or just putting it to office supplies, not a bad thing if we think it is a business expense and we don't know where to put it in terms of a specific account, or if it's just small and it's not worth us making another account. But again, if it gets to be the fact that the miscellaneous or office supplies is our biggest expense category or something like that, that looks funny. We're probably going to draw questions from folks, possibly the IRS or someone else asking questions about that. So we're going to put this into expense, and there it is. Save and close, and yes. So now we've taken those 300s. If I close this out, they were draws, and the two things that could happen, one, we put one draws into miscellaneous because they said it was business related, or if it's personal and they took it out, the other draws that we had, the one in January, we put into the balance sheet in draws. So it's not on the income statement. It's not lowering net income. Okay, and so we'll go back to the profit and loss here. And so that's the withdrawals that we have. Okay, and then now we're on February's information. And let's just see what else we have in the uncategorized income. Note that we did have the Visa credit card payments in here, but we took care of those in a prior presentation. So I've moved those out, taken care of those again. And then we have Ted's Steakhouse. We're going to say that Ted's Steakhouse, we asked the client about that, and that was a business related place. Therefore, we'll double click on this item and we're going to change this to something appropriate. We'll say meals and entertainment, probably where you want to put any restaurant, meals and entertainment, and say save and close. If it's business related, if it's not, then we'll put it into draws if it's not a business restaurant. Epiphone, we already saw that. That's going to go to the cost of goods sold. We'll double click on that. Take this to the cost of goods sold. Save and close. Then we've got the sales tax. Now note just the state tax here. That could be any kind of tax. We'd kind of want to know which type of tax it is so we can better categorize it, because that'll help at the end of the year to break this out. We're going to say that we asked, and this is sales tax. Now again, sales tax is something that may only be there if we sell merchandise, or usage tax for different places might be there. If we want to get into working with the sales tax, that's a question whether or not we want to get into the tax forms for the sales tax. That is different than income tax, and it might be something that we can pick up or not and still have some differentiation from accountants that want to pick up, or the tax preparers that can pick up the tax preparing at the end of the year. So we're going to recategorize this. I'm going to make up a new category because there's nothing in terms of sales tax here. And we'll just call it sales tax expense. Let's capitalize them. I think they're all capital. Sales tax expense and expense account. That's the one. So we'll save that one, sales tax. And then the last one we've determined was income tax. And again, if it's a sole proprietor, probably better to put that to draws, because it's probably the case that it's not going to be something that's going to be on the income statement for the tax return that will be deductible and therefore could go into draws. But if we have any question about it, we might want to just put it to the expense account called income tax expense or something like that. And oftentimes the state could be deductible. Part of the state tax could be deductible and the Fed not. But and there's some differences in terms of what is deductible in terms of taxes versus a business related or non-business related. In this case, we're going to say, okay, this is the personal tax typically on the 1040. I'll put it to draws. But again, if there's any question about it as whether you want it in there or if it's deductible or not, you could put it into the income statement where it's visible. And then as tax preparation happens, they can question it at that time. So I'm going to double click on it. I'm going to put it to draws. And we'll put it up here to draws, equity, owner's draws, and save and close. Okay, so there we have this. So now if we close this out, we now have an income statement that's more appropriate here. So our income statement looks like we don't have those uncategorized accounts, and it looks like more appropriate for this time period. We have currently the net income at $1,706. For more accounting information and accounting courses, visit our website at accountinginstruction.info.